Over the last few years, digital, and in particular the cloud, has had a massive impact on the competitive landscape for almost every company. It's very much innovate or die for those providing products and services, and many CFOs are busy behind the scenes driving the operational and financial aspects of a digital transformation. In this episode of FDE TV, we'll speak with three executives. Jo Verstappen, Sales Director of EMEA Managed Services, Madrian, CFO and Chief Commercial Officer of Reactive Technologies, and Elliott, Handworker, EMEA Manager of Architectures for Cisco Capital. We get their insights about digital and the cloud, the role of the CFO in digital transformation, and how the underlying technology for cloud can best be financed.
OpenLine is based in the south of the Netherlands. We started in 2002 with 4 people and a vision to build data center solutions. Today we have scaled up to 165 people and are now focused on helping companies deliver cloud services to their own clients from our data center. So we've transformed from being consultancy to becoming a cloud-enabling company. What I have found is that if our clients don't change and if they are not agile, then they will quickly go out of business. In this fast-paced world, you need to keep building and refreshing your assets and applications to become digital companies.
Digitization is a big central part of Cisco's strategy. It's making sure that the network and what Cisco are trying to provide is the front and center of enabling customers' business. And as a result of that, that means that whether it be a car manufacturer or a utilities company or a service provider or a bank, they all have elements within their business that need digitized to be part of the way that they do business today and tomorrow, and Cisco Capital can help enable that realization.
So digital is very much the new normal. The question is, how does a CFO approach digital transformation, especially in terms of the roles and responsibilities a CFO has compared with the CIO?
When you're talking about the digital transformation, you usually talk about investing larger amounts of money. And that gets a CFO very excited, particularly if the payback periods don't happen over a year or two. So I would say traditionally this relationship has been more on a transactional basis, meaning that I give you the money and you do your job, enabling our system estate in a way that it performs better in the most efficient and effective way. So, and whilst I believe that there is a huge need for financial rigor and challenge, I think a purely transactional relationship isn't good enough. Ultimately, if you want to form and shape something going forward, you need to create a transformational relationship with your CIO together.
The role of the CFO has really changed over the years, and it's actually had an impact on how Cisco go to market and do business. Traditionally, you would go and talk to networking or operations or IT type people, whereas Cisco Capital type people would always just go and talk to the CFO, and it would be a very siloed approach. And unless they and we are linked with the business stakeholders within that organisation, then that model won't necessarily make sense. It's not just as simple as on, off balance sheet, lease rate factors or interest rates anymore. It's why is this going to make a difference in my business? And because of that, the role of the CFO has really changed.
So in a digital transformation, cloud has become the key delivery model for all types of companies to better serve clients, be they consumer clients or corporate clients. Any company can now be a cloud provider, and of course, anyone, including the CFO, can be a cloud user.
It's not the traditional, normal incumbent telecoms operator. It could be a utilities provider, it could be mobile phone, it could be anything. And so cloud to me has grown because of the perception of what a cloud service can be.
So in the past we had to do sequential steps in the year end, one after the other, in order to get our close ready to go after a decent amount of time. Now, through cloud-enabled services, we are able to do that not sequentially, but actually work on the same thing from different angles at the same time, so literally live, without compromising on data governance, data quality, or data integrity. And I find this really exciting.
So cloud is not just a useful tool for the CFO's finance function, but for the frontline business, The question is, what is the best way to finance the technology assets behind the cloud?
The type of financial solutions and how they've evolved over the years, they have evolved quite widely. Certainly the days of loans or just finance leases are changing and are long behind us. Over years, residual value-based financing has certainly taken a much more prominent role in the industry, and as we'll discuss more later on, risk share models are definitely much more prevalent too. That's on the advent of cloud-type consumption models, which now is really just table stakes to be part of the game.
As a finance guy, I would look at cash cost anyhow. So cash is leaving my door, and what do I get for it as a CFO? The way then how to run it either through your P&L or over your balance sheet through depreciation afterwards, it's almost a secondary thing. What I need to have is a partner who is able to deliver a technology which helps me most to drive that bottom line, and not at the expense of cash flow, but also having that in mind and trying to find a good solution for it.
So the key considerations in financing technology are partnership, driving the bottom line, and coming up with a solution that fits in with the pay-as-you-go expectations of the latest generation of CFOs. Now, Cisco Capital has developed a consumption-based financing solution called OpenPay that can serve the needs of companies that want to be cloud providers but don't want to pay upfront in full for all the underlying technology.
OpenPay is a way of Cisco being able to provide a cloud-like experience for customers who want to own and have their own secure assets on their own premises. So they have a public cloud type experience but within their own data center premises. And it's a quasi-consumption model where there is a fixed element of around 70% and a variable element of 30% where that part is actually on the drip or as you eat, as you would have heard in the past.
So OpenPay is a risk share model, and OpenLine as a Cisco client has found it particularly useful as they can align it to the dynamics of their own customers' cash and working capital cycles.
When we build cloud solutions for our clients, we miss the income up front. In the new OpenPay structure provided by Cisco Capital, the costs are in line with the income phasing that we have from our clients. This way we get the time to grow in the contract without making direct costs.
You might be a manufacturer who may have spikes in when you actually manufacture products or drugs if you're a pharmaceutical company, and there might be spikes within when actually you provide that type of solution within your business. You might be a service provider from a telecoms perspective who are providing telephony or computing solution, and it might be a new element within your market that you're not aware of. You may even be an oil and gas company who have users out on rigs in the North Sea or other areas in the world who actually aren't sure when they're going to need to spin up an environment and actually draw some schematics. So I wouldn't say the type of organisation, it's actually do you understand when and how you're going to utilise your platform, and if the answer is not completely, then this solution is for you.
If the jump to becoming a digital player is daunting from a financing perspective, there are solutions like OpenPay from Cisco Capital that can reduce the risk as you embark on your digital, or more specifically cloud journey. So this, and engaging with key stakeholders from IT and the business to create a transformational relationship instead of a purely transactional relationship, are central to success.